Now, the Fed's preferred inflation gauge climbed to 4.1% in May, its highest level in more than 3 years. Core inflation also accelerated to 3.4%. The hotter than expected data could push the Fed to keep rates higher for longer or even consider another rate hike later this year. And joining me now to help us make sense of all of this, because this all just sounds like numbers to me, is Barron's Investor Circle newsletter editor Josh Schafer. Josh, thank you for your time. So this report shows inflation moving in the wrong direction. How does this change the outlook for the Fed?
Yeah, so inflation moving in the wrong direction for the month of May, but the upshot here is it might actually be the peak in at least headline inflation. So oil prices or energy prices are heavily involved in that 4.1% number that you were citing. And if you look at other areas in the market and what markets have been pricing for oil prices are down significantly over the last month, and we're down significantly in June. You could even feel that at the pump. Gas prices are down on average nationally about 60 cents over the last month. So that headline inflation number might be peaking. The problem is, Mugo, the problem is going to be that core PCE number. So core PCE coming in at 3.4%, that strips out energy. So energy is not a key component there. The issue being energy feeds through into other areas. It feeds through into areas like transportation. And so economists are worried it might be stickier and take longer to get down to that 2% target. So today's data in sum largely keeps the Fed on hold. I'm not sure it makes a true argument for them to move interest rates higher, but it certainly doesn't make an argument for them to be cutting rates anytime soon.
Right. But we also saw first quarter GDP growth revised higher to 2.1%. What does that tell us about the health of the U.S. economy right now?
Economic growth data has been solid. So you had that revision of 2.1%. It looks like we're pacing, at least per the Atlanta Fed, at about 2.5% for the current quarter, which will end at the month of June. And you look at labor market data, we're going to get another jobs report next week. But the last 3 months, non-farm payrolls, the U.S. labor market has added over 170,000 jobs per month for each of the last 3 months. The unemployment rate is held flat at 4.3%. And then inside that PCE report this morning, consumer spending ticked up more in May than it had in April. You also look at income was up and consumer savings was up. So generally speaking, the economy at least on an aggregate level is on pretty solid footing. And then you have the Fed essentially just waiting for inflation to come down to be able to maybe cut rates later in the year if they're able to at all.
Okay, Josh Schafer, thank you for helping us understand things. We appreciate your expertise.